Hey everyone, today I'm talking about the average true range trailing stop strategy by Sullivan Verroort. Sorry man, I might have got your name wrong. But today I'm talking about that because it's the easiest and pretty profitable trading method. And I'm going to talk about what the math is behind it, what the coding looks like, and then some examples, how I use it, and how I'm planning to use it this year a lot more because it's pretty simple. And I like the idea of following up my gains with stops so I don't have to try and call tops and then miss out on profit and everything. And this is pretty easy. So let's get to it. Okay, so in TradingView, the first thing you want to do is go up to the indicators and type in trailing stop. And then here, you want to go down to the average true range trailing stops colored by H. Potter, 1124 likes. This is one I use. You can see based on the likes what other people like using. This is the one I like using. So click to add it, maybe make it as a favorite or something like that. And then up here you'll see that it basically uses two variables, 5 and 3.5. And you also see here that it starts as blue when it has no data, turns red, which means that you're either shorting or you're not in the trade, turns green, turns red, green, red, green, red, like that. And basically it works on the close of candles, and it just kind of follows it up. And when you have a close below your green, as you can see, green always goes up, it never goes back down. You never lower your stop losses, that kind of thing. Red starts pretty high and comes down, and then when they get pinched they switch, and that's how it works. So looking at the coding behind this, so it's actually a very simple strategy. I'm not too familiar with coding on TradingView. I have done coding with other things, but not with TradingView, so my interpretation of this might be a little off and wrong, but it's from what I can gather from the code. So basically your 5 and 3.5 up here is your input, and then you have another input of 3.5. You have an ATR, which stands for average true range, which is the max high minus low, the absolute of the high minus the close, and then the absolute of the low minus the close. And basically it does that for the last period, which is 5, which is where the 5 comes from, so the last 5 candles. And then it also multiplies it by 3.5 in this case. And this is actually a pretty decent value. You can change these to 5 and 3.5. Click the gear and you can mess with it if you want to try and make it better or however you want. Basically, you need the multiplication to stay away from the candles, and the last 5 usually give a decent picture of how things are. It depends which time that you're in, and I'll go through that, but that's basically what these are. So if you want more of a stop loss, less fake outs, you want this number bigger. If you want to be faked out, but you want to protect profits, you'll want this down to like 2, or 1 is going to give you random flickers because you're going to be bouncing on the candles. But that's basically how this works. And then the stop loss and everything, and then it does a bunch of if statements here with variables based on the last however many candles, and that kind of thing, your position. And this last section here is just the coloring and plotting it all out. So that's what the code looks like. It's very simple. As you can see, it's 17 lines, and the first half is like comments, right? So that's pretty much that for the code. And I'll show you how it works, and then we can get to some crying because I wish I found this a lot sooner. Okay, so for all my examples, we're going to start at 2017. It's when I got in, and I wish that I found this a lot sooner and everything, but it's all in the past. We're going to use it in 2018, and I'm going to see how it goes. We can probably use it for a lot of things because I like the way that I trade with it. It's not the only indicator, but definitely is pretty strong and proven, and I'll go through that here. So let's start in 2017. You can see here that there was a twist and it flipped, similar to the guppy, but this is more of a trailing stop loss rather than the guppy is a bunch of moving averages. And you can see it moved up. And the thing about this is you never actually place your hard stop. With this, you want to put an alert. So you can right click, say add alert, and then you can put create alert on it, and it sends you a text message. That's basically how I'm going to use it. So then you can follow, the alert can follow the line. When you do get an alert, you want to look, because you don't want to put your stop loss. As you can see, this was a different type of event if you want to look this up, but you don't want to get faked out. You want to get out when it closes below the green. And as you can see, it never closed below the green until here. It closed, and then we didn't have any of this going on. And then you got back in, it was actually higher because it had to wait for it to close for the red to come down on it. So this is more about protecting profits. You know, if you're holding long term, I consider this pretty long term, on a 1-day chart. You know, from 2017 January to June, July, holding ETH. I held ETH until I got to about here. Is where I got mine, but it depends which time frame you're using, and you're going to see more flips the lower time frames, of course. But so we flipped this, got in actually a little higher because the close had to happen up here, and you follow this as it goes, and we'll look at some more examples. So the way that I like using this is I only use it on the 4-hour and on the 1-day chart, this one. I use it on the 4-hour, and I sometimes get faked out, which is fine, because like here and here you get faked out. On the 1-day you can see that you know, you don't trade any of this. On the 4-hour you're trading a little bit of this, right? A couple times. This one you made a little bit. This one you got faked out, so you got stop lost, which, you know, you lose. You're supposed to only lose 1% of your trading stack, right? It's supposed to be buying the dip to the line. When it closes, you get out. But the reason I start with the 4-hour is because when I see the twist, like right here, we also saw the twist of the guppy at the same time. And it's kind of funny because this indicator also has stops around the same marks that the guppy, your fib lines, the Ichimoku cloud. It's kind of funny how it all lines up. The whole universe is in alignment, you know. But basically, you buy here on the twist, and you buy down to the line. If the line closes, if the candle closes on the other side of the line, I'll zoom in here. As you can see, it went and it closely touched it, right? But it never did. So you'd buy here, and you'd buy to bring your weighted average down, down, down to the line. And if you saw close, you'd get out, right? You'd flip to red. But it didn't. So, and it's funny because this one is similar to the guppy I bought around, you know, 390, 380. This is when the guppy twist happened. You follow it up, you place alerts, and then you get out here. And I got out just below this, I believe. 616 I got in and got out. So I could have used this, but you're also waiting for that candle close. And as you can see right here on this first one, and then there's the second hard one, and then it closes. Technically, you'd be out down around there. Because it closed on this third candle. So it'd be about the same. So you'd be out of this just in case. This is all about being safe, right? And then you buy in a little bit higher, and then you continue on. And the way that I like to trade it is I start on the 4-hour, and then to avoid this, you look on the 4-hour, I got in at 398, and then on here, I'll just mark 398 again. You switch to the 1-day right here. I got in on the 4-hour. And then you switch to the 1-day once the red turns green. And you can see right here, and you follow it up, and right now, currently, you'd be up, if you just traded the daily, you'd be up 62%, but because you started on the 4-hour, you're up 102%, right? And you didn't actually get faked out on this, or not faked out, but you didn't protect your profits on this because we switched to the daily just after. So if you're still holding ETH, you'd still be holding right now. Your stop loss, you'd wait until a candle closed, which means at the end of the day. You'd have to find, you know, your time zone and all that junk, but you'd wait for a candle close. Just like here, you'd see, it's hard because you'd see 1400 and you wouldn't get out until 826, right? So it's hard to see it, but you have to see it because the next examples I'm going to show you here are going to blow your mind and make you cry. Because it made me cry. So here's the strategy using only the 1-day on BTC, starting with $5,000. And in 2017, it was actually the red happened right around January here, right around the start. So I didn't include this. I started here, which was the 30th of January. So here to here, we made 13%, which is not amazing, in 43 days, as you can see. So you have 5,000 enter here. You get out with 13%, 56.51. That's one trade. You don't trade any of this. And while these are red, you could switch to another chart, and I'll switch to other charts. You could switch to another chart and play something else. And if you get out, you could come back to this one. You just compound it, right? But this is just going to show you. So with this one, 93% with this one. Now we're up to 10. And then this one, 63, 29, 63. And then you're out of all of this. And 22%, this is currently happening. And so at the end of 5,000 at the beginning of 2017, you'd have 46,000 currently today, which is May the 5th? Yeah. This is BTC, right? This is just trading BTC to USD. That's all it is. And this chart can be, you can use this for BTC to any of your alts. You can use it for ETH to anything. You can use it for anything, right? Now we're going to look at ETH. So ETH starting $5,000, 2017. Looking for the twist. Twist happened. We bought. I measured it from the close, which was actually, if I zoom in, right here, 1 day before the actual good pump there. So we would have got in at ETH around 842. I bought my ETH closer in February. 5,000 starting. This is one trade. By the way, let's go back here. 1, 2, 3, 4, 5, 6 trades. You took $5,000 to $46,000, just so you know. $5,000 on ETH. This is the one wave that I rode up to the top here. I tried selling and shorting, and I was, a noob, and everyone is back in the day. So I kind of wrecked some profits there. But coming in here with 5,000 right at the beginning, January 2nd, you'd be in for a total of 187 days using this method. And you'd make 130, well, you'd have 139,000 after 187 days, starting with 5,000. This was a really big, bull run. You'd be out of this a little bit here. Of course, you'd be selling at around 228, which wasn't, the 400 or whatever, which is fine, because you just gotta watch this. And then you did a little trade here. In 28 days, you made 30% on top of that, which is a nice. You're up to 180 here. I made about 40 grand. Another one here, 113 days. You got in right here. You bought down the dips, and you continued up. So I did it just from when the twist happened. So if you bought it down here, you could adjust this, of course, but I just did it from the twist. This is the worst case scenario that you would have made, and that's what's kind of sad. This is the worst case scenario. But so after this trade, you'd have 448 because you took 180, went up 146%, and then this is the current trade that we're in now, and now you'd be at $709,000. Again, 1, 2, 3, 4 trades with 5,000 starting. But wait, there's another one. We got Ripple here. So Ripple did do a big, huge gain. And if you sold the very tops, you would have been doing really good. But this is to show you don't need to sell the tops. This is fine. $5,000 starting. The twist happened in March. Yes, March 3rd here. The blue line means that it doesn't have enough data here. It's not in. It didn't flip once yet. That's basically what it is. This is the earliest XRP to USD chart or exchange that I could find right now. So in 2017, you didn't buy anything, and you can see this would have been red because it's coming down. And then here's the twist. March 1st, let's say, you had 5,000 starting in this one trade, March 1st, and 129 days, you had $153,000 from your 5 grand. This is similar to ETH. And I'm going to show this example. I want to show this one because it's a little different here. Zoom in a bit here. This trade right here you can see is very volatile and flat. This one only made 4.72%. 153 is 161. This is where it gets tricky here. This was actually one where the stop loss hit. So the time you got in, the candle you got in on, was actually, you couldn't even bring your weighted average down. And we got out at minus 2.73%. This is about protecting your profits. You could have not played this, but if you're staying true to the average true range, you're playing it just as you see it, right? You saw red, you're out. If you didn't sell, you would of course made a lot more here because this is more of like a springboard kind of thing. But this is to show that we took 161,000 and we sold it for 156,000. Now we took 156,000, did this huge trade, which was 244%. We're up to 539. Currently, Ripple's looking at here, and it's currently at 45.96%. We would be at $787,000 is what we'd be looking at here right now. And again, this is on the daily, looking over the course of a year. 1, 2, bad trade, 3, 4, 5 trades. You took $5,000 to $787,000. This is why, if you don't want to learn TA, if you don't want to learn, the cloud, where things are going, and this is kind of the direction that I'm headed because it's more casual and you can see the gains, it doesn't matter if you're catching tops or selling the tops or anything. If you follow a pattern just like this, super easy. Add the indicator to your chart, look at the chart. Is it green? Is it red? If you want to get in a little bit sooner, like I did here on ETH, you look at the 4 hour. You might have some fake outs. You look at the 4 hour, you get in here. When the daily kicks to green, you're pretty much set and you're golden. Because usually when it kicks to green, you can see we're going for some good days. Here's a little bit of a day. And then of course, the beginning right here, that was this big. Can you imagine if we had this going on over here? Right? You never know. But this is just, it's super easy. This was 4 trades, with BTC, 1, 2, 3, 4, 5, 6 trades. And then you got Ripple, 1, 2, 3 bad trade, 4, and 5. If you had $15,000 last year, $15,000 is all you needed. I mean, you could have put it all into one, or you could put it into, 3, diversify, even though that they all kind of fluctuate, and you can see kind of that Ripple was the best one out of all of them. ETH was pretty close. But let me do some quick math and just pause recording. Okay, quick math. $15,000, 5,000 into the top 3, starting in 2017. You have $1.542 million right now. Not only that, you're still green to go on all 3 of them. So you can see you can scalp for a little bit, or you can play the big kind of waves like this. In the end, it almost evens out, It's best to compound when there's a red zone and you're not in a trade here. Maybe you want to look into a trade here, right? So if we can bounce off, you don't need to have, 100,000 coins. You don't even need to have 100. I don't like to have more than like 3 to 5 when I'm actively trading. Sometimes I just have 1, and I pick the one with the best gains that I think are going to happen. But if you just want to be like this, it's pretty easy, as you can see. So hopefully a quick video, and that's pretty much it for this one. Thank you.